Hello.
Hi, Brogan. Okay,
Yeah, back.
we are back. Great. Okay, so we've got the disclosure question for CCs. Obviously, we've done question 1 and we've done question 4 now. CC questions you should actually prefer because CC questions are actually very similar to FAC1601 in terms of disclosure. Why do I say that? Do you know why?
Because of the tax purposes.
Okay, because
And
is
because
the owner separate from the business?
yeah,
Yes, so do you show all the separate expenses as separate expenses?
yes,
Yes, you do. Okay, remember with partnerships, you don't show partnership line items in the statement of comprehensive income. Okay, so
yeah.
for example, in the previous question we just did, when I spoke about interest on capital, did I put interest on capital in the income statement?
No.
No, I didn't, because that belongs to the partner. It belongs to his equity.
Yeah,
Okay, so you'll see this is actually an easier question because disclosure is a lot simpler. What did they ask you for? Here's the required. Prepare the statement of profit and loss and other comprehensive income for Tom and Sam. And they're a CC. So what do? I go to my answer sheets and I draw that up. Okay, now we're ready to start the question.
yeah.
Okay, here you're probably going to have sales and cost of sales, so I'm going to just write down the general format.
It doesn't show on your thing yet.
Gross profit. Oh yes, sorry, I've forgotten to share the screen. Okay, it should be coming up now. Gross profits. Can you see everything?
Not yet. Yeah, I can see it now.
Okay, great. Okay, so gross profit is what we've got, okay, before we have other income and expenses. And then we'll have other expenses as well. And then we know we'll have profit before tax because this is a CC. And you'll have profit before tax and tax, and then you'll have profit after tax or profit for the year.
Yeah.
Okay, so those are the different line items that you're going to have when dealing with a CC question. A CC question will always have before tax and after tax because CCs are taxed. That's revision. Okay, let's get our easy marks. Go to the question, go down the list, and identify the different accounts. So let's start with retained earnings. What is it?
Retained earnings is a asset.
No, retained earnings is profit that you haven't paid out. So that's part of the equity.
Okay.
Retained earnings would go to the statement of changes in equity as one of the columns.
Okay, statement. Okay.
Okay, loan from member.
It's an asset.
No, if you take a loan from a member,
Oh, it's liability because you owe them back,
yes,
so it's
because
a
remember,
liability.
the business is separate from the members.
So it will
if
be a
the
liability.
CC, yeah, it would be a liability. If the CC takes out the loan, it's a liability, right?
Yeah.
Good. So loan to member, Tom, if it's a loan to, what is it?
It's an asset.
It's an asset. Do I need any of these liabilities and assets? No, because what am I focusing on? Profit and loss.
Yeah.
So what do I want? I want income and expenses. That's it. Okay, so everything else you can ignore. Land and buildings, do I need it?
No.
Equipment.
No.
Accumulated depreciation.
No, that's a negative asset.
Revaluation surplus.
No.
Why not?
Oh.
It's owner's equity.
Okay.
Okay, so again, another SOC line item. Inventory, do I need it?
No.
Yes, I do. Because 1st of March is opening or closing.
1st of March is opening.
Yes, so when you see opening stock, you should be looking for what other word?
Purchases.
Yes, do you see it?
Yes.
Right, so what system is being used?
Periodic.
Exactly, there you go. Okay, so you need that and you need to show that. So inventory, okay, for cost of sales, I'm just going to show a separate working here. Okay, remember you need to study the formula. Cost of sales calculation is as follows. Opening stock, add purchases, less returns, add other costs like carriage and purchases, import, export, duties, less closing stock. Gives you costs of sales. Right, so I can see you did manage to draw this on your workings and that you did ahead of time. You had a cost of sale calculation with the formulas. That's important. That's good. Okay, so obviously inventory 1st March is opening stock, so I'm going to put 8950 there. Okay, do I need bank?
Yes.
No, bank is an asset.
Oh, yeah.
Income received in advance. Do I need it?
Yes, it's income.
No, it isn't. Income received in advance.
Liability.
Why?
Because you paid for something you haven't yet done.
No, you're not paying for something you haven't done. You've received money for something you haven't done.
Yes.
Okay, so is there an obligation? Yes. There's an obligation to either refund, okay, the money that you received, or to render the product, or to render the service, or deliver the product.
Yeah.
Okay, so that's a liability. I don't show liabilities here, right?
No, you don't.
No, you don't. Okay. Allowance for credit losses.
Credit losses is a negative asset.
Good. SARS income tax with a debit. What is that?
It's being deducted.
If it's a debit?
It's decreasing.
No. If it's a debit, is it an asset, a liability, an income, expense, capital drawings?
It's expense.
Yes. So that must go here. There's it. Tax, open brackets, 21,300. There's an easy mark. Salaries, what is it?
It's expense.
Correct. That goes here. 85. Carriage and purchases, important or not?
That's not important.
Very important.
It is important because it has to go for the cost of sales for formula.
Correct. So now we can change that to carriage and purchases. How much? $8.99. Settlement discount granted. Do I need it?
Yes.
Yes, it's a discount that you're granting, so the effect would be like an expense. I'm going to show it as a separate line item. You can show it against your sales if you want to. It's possible. Okay, I know UNISA tends to offset accounts quite often. I would show it separately, but you can show it against the sales if you want to. The net effect is still the same. 2182. Purchases, do I need it? Of course I do. It's cost of sale calculation, right?
Yes.
Okay, telephone.
It's expense.
Correct, I need it. 4015. Remuneration, do I need it?
No.
Yes, I do. Remuneration is an expense for the business. Remuneration is like a salary or a wage. And this is paid to the accounting officer, so we need to show that separately. Okay, the amount here, open brackets, 10,800. Allowance for settlement, discount previously granted, forfeited. Do I need that?
Yes.
Yes, it's forfeited. So if you forfeit a discount, what does that mean? You didn't give it. Do you agree?
Yes.
Okay, so let's try and understand what happened. You allowed for a settlement discount previously granted. Okay, but it's forfeited. So what does that mean? You reversed it out, right?
Yeah.
Okay, so an allowance for a settlement discount received granted. What would the allowance have as a balance, a debit or a credit?
It's gonna have a credit.
It will have a credit. Good, it'll be a negative asset, correct? Okay, so the discount allowed would have been debited. Okay, it's very similar to allowance for credit losses. Okay, so let's think about that for a minute. Allowance for credit losses. The credit loss will be an expense. You would debit the expense, and then you would credit the allowance for the credit losses. Here, I've got an allowance for a discount that's granted. So the discount granted is the expense. It will be debited, and the allowance will be credited. Okay, but this is a forfeit. So what does that mean? Reverse it out. Do you agree?
Yeah.
Okay, so I'm going to minus the forfeited discount from the discount. There's it there. Okay, I'm just going to put an asterisk here. Forfeited discounts. Okay, meaning you actually reversed it out. You got rid of it. Got that?
Yes.
Stationery. Expense, right?
Yes.
Sales.
Sales is sales.
Income. Sales is sales, yes. Okay, there you go. There's all your easy marks. Now you have to go through all the adjustments. Okay, so let's go and let's look at each of them separately. Okay, there's additional information. Point number 1. Okay, what does point number 1 say? Well, they say that the allowance for credit losses must be adjusted to 4,500. What is the current allowance?
The allowance, okay, so the allowance is 3,000, but it's so you have to add, so it's going to be 3,000 plus 1,500 minus 2,500.
Okay, yes, so you have to make the allowance bigger. If you make the allowance bigger, you're going to process more credit losses. Do you agree? Because you would have debited the credit losses, and then you would have credited the allowance.
Yeah.
Okay, so do I need both? No, I just need this one because this is the expense. Okay, so credit losses is an expense. Let's record. Open brackets. 1,500 is the adjustment. Then they say a debtor owes 2,500, declared insolvent, written off. So there's an extra 2,500 which you said we had to add, which was correct. Gives you a total of 4,000. Got that?
Yes.
Good. Okay, number 2. Land and buildings were acquired on the first, on March 2011 for that amount, and were revalued annually. The fair value of the land and buildings on 29 Feb 2016, which is this year, amounts to 750. What was the existing land and buildings? There's the existing land and buildings. How much is it?
720.
So is it more or less?
It's less.
It's less, so that means you're going to increase or decrease it?
Increase it.
You're going to increase it. Good. Okay, so that means you'll debit the land and buildings, and then you'll credit the revaluation surplus. Okay, or fair value adjustment. Right, I would look at this as a fair value adjustment because they talk about revaluing the building. Right, so I'm going to record that here as income. Okay, if it was a revaluation surplus, then that's equity. Okay, but you aren't tested on the statement of changes in equity, and that's why I'm referring to it more as a fair value adjustment. Okay, so the land and buildings went up by how much? It was 720, it should be 750, so it's gone up by 30. Good. Next, 3. Income tax expense for the year amounts to that. Must still be recorded. So what must we do to this amount here?
You need to record it.
Plus or minus?
Plus.
Correct. Okay, they say that the income tax expense for the year amounted to that and must still be recorded. So we need to add an extra 7,100 to the tax figure for the year. Make sense?
Yes, it does.
Okay, remember this is a negative, so you'd show that in brackets. You would subtract that from your profit before tax. Okay, so you can see CCs are a lot easier to do. Okay, number 4. Do I need this?
The loan from Sam was acquired on the 1st of March 2015 at an interest rate of 5% per annum. The loan to Tom was granted on the 1st of October 2015 at an interest rate of 8% per annum. Interest on all loans for the current financial year has not yet been accounted for in the accounting record of the CC.
I do need it, right?
Yes.
Definitely. Okay, and I need to provide for what? The financial year. Do you agree?
Yes.
Okay, so beginning and end. Again, you always do the same thing. You draw a timeline. Okay, so I've got 2 loans here. I've got loan from and loan to. So loan from Sam, then a separate loan to Tom. Okay, so we know a loan from is what? That's a liability.
Liability.
Liability, good. Okay, liability. Obviously, the opposite would be an asset. Okay, the loan from Sam was acquired on 1st March 2015 at a rate of 5%. Okay, so 5% per annum. It was obtained here on the 1st of March. The loan to Tom was granted on the 1st of October. Okay, so 1st October is somewhere during the year 2015. Okay, at an interest rate of 8%. So 8% for this loan. Interest on all loans for the current financial period have not been accounted for. So must we account for it? Of course we do. Okay,
yes.
So there's the loans. Do you see them?
Yes.
Okay, so Sam has 80, Tom has 60. Let's put that in. Sam has an 80k loan. That comes here. Alright, and Tom has a 60k loan. That came here. Right, so if I'm looking at their loan, did you hold this loan for the full year? Did you hold Sam's loan for the full year?
Yes.
Yes. Would you have interest then for the full year?
Yes.
Of course you will. Did you have Tom's loan for the full year?
Yes.
No, not for the full year, Tom.
Oh no, he only had it for a couple months.
Yeah, how many months?
October to October, November, December, January. 5 months.
Okay, let's double check. October you count because it's the 1st. So October, November, December, January, and you do count February because it's the end of the month. Good, so 5 months is correct. Okay, so 60,000 times 8% times 5 over 12 gives you an amount. How much is that? Let's check. 60,000 times 0.08 times 5 over 12 gives me 2,000. Okay, that'll be seen as what? Income or an expense? This one.
Income.
Good. Okay, because it's an asset. Assets generate income. Right, because he's going to pay the CC. So interest on loan to Tom. 2,000. Just take my working. There's it there. Okay, and then I'm going to have interest on loan Sam, which is bad. It's a liability. So 80,000 times 5%. It's for the full year, right? So no pro rata. Do you agree?
Yes.
Okay, gives you 4,000. So I'll have interest on loan from Sam, and I'll have an amount of 4,000. Got that?
Yes, I got that.
Great. Okay, next. Let's go back to the question. Number 5. Each member of the CC received a salary of 2.5 per month, which was paid in full. This amount is included in the salary stated above. Do you show members' salaries in the statement of profit and loss?
No, you
a
have to
member's salary, not a partner, a member.
No.
Yes, you do. A member is like any other employee because the CC is standalone. Do you remember that?
Okay, yes.
Okay, remember, a CC will survive forever.
Yeah.
Okay, it's a separate legal entity. It runs on its own. It doesn't matter who's the member. The members are separate from the business. Does that make sense?
Yes, it does.
Okay, so must you show their salary separately? Yes,
Yes.
you do. Right, so I'm going to subtract, open brackets, 2,500 times 12 months times 2 members. Close brackets. Close brackets. So we need to fix the disclosure. Okay, so 25,000 is going to be what's left over, and then 2,500 times 12 times 2 is 60,000, and this would have been the salaries for members. Does that make sense? You see, everything is separate with the CC.
Yes.
Okay, disclosure is very important. So even like that, we have to show it. So I take out that portion there, and then I show the portion here. See that?
Yes.
Okay. 6. Provision. Oh, I forgot the bonus. A total bonus for 2016 financial year amounted to 15, equally divided, must be paid to members and recorded in the accounting records.
So
Right.
what I did is I added 7.5 to each person.
Correct. Plus 15. Right, like that. You see that?
Yes.
Add the bonus. Good. Okay, provision of 31455 must still be made for depreciation. Where do I put depreciation? See, this is easy. What is depreciation?
A loss. So won't it be a liability? No. It will be expense.
Yes. Depreciation on equipment. 31455. Inventory on hand. Do I need that?
Yes.
Of course I do. There's my closing stock. 8870. Okay, so no returns in this case. So can I now work out cost of sales? Of course I can. Opening plus purchases minus no returns, add carriage minus closing gives you an answer of 45. Right, so 45,000 is going to go there. As a separate line item, again negative. Right, sales as that total. Okay, gives you gross profit. Gross profit is the sum of those two amounts. Oh, well, the one minus the other, okay, because the one's negative. Right, and then you've got fair value adjustment. So other income would have been this plus that. Okay, so that gives me 32,000. Okay, so gross profit and other income, I'm going to add those amounts together. And then I'm going to minus these expenses.
Yeah.
Okay, let's just work out these figures here. Okay, the settlement discount granted that was forfeited needs to go down. So that's the 1,700. 4015 there. 10800 there. Stationery there. And then we've covered that. Now we need to sum up all the expenses. Gives me that total, the other expenses. Okay, so final total will be gross profit, this total, plus that total, minus other expenses. Okay, so profit before tax. This plus that minus the other expenses gives me profit before tax of 40,912. Profit for the year equals this minus that, gives me 12,526. And that's CC. Disclosure for a CC is very easy.
It is much easier for CC.
You know, as I said, it's so similar to your FAC1601 because even the type of adjustments that they give you are very similar. It's like working out interest, working out depreciation, working out cost of sales. Okay. Happy with that?
Yes, I am.
Good. Right, so let's save question 2.